Well, good morning, everyone, and welcome to our Wednesday morning demo room / trading session. How are you guys this morning? The market is just about to open. Hang on a moment here while I get to my screen. All right, everybody should be able to see my monitor. Welcome to the room. As I mentioned, this is our public open house demo / trading room. So I'm glad that you took the time to join us. I hope that next hour and a half or so, we might be able to pick up a winning trade or two, and I'll teach you a little bit more about the diversified trading systems. Please feel free to ask questions. That's why I'm here. What you're looking at is the diversified trading systems, and it's diversified because we're looking at the market from 3 different points of view. We have here in the top left, we have the Hawk Micro Scalper. Top right, we have the Falcon Swing Trader. Bottom left, we have the Eagle Trend Trader. And the bottom right, we have the latest addition to the Indicator Warehouse family of trading tools, and that's called the Raptor. The Raptor is actually a blend of the other 3 tools. It kind of takes the best out of the Hawk, the Falcon, and the Eagle and combines them into one tool. And before I forget, let me get you the link. If you have any questions, here's a link to these tools that will also give you more information. The thing about these trading tools is they all develop trading signals the same way. Oh, by the way, the charts I'm looking at on this screen are the NASDAQ. On my other monitor, I'm also watching the YM, that's the mini Dow, and crude oil. But I can certainly take a look at any market which is of interest to you. So just let me know. All right, signals always develop the same way on our trading tools. And this is the Hawk Micro Scalper. And when the trade parameters are first being met, we get this warning dot and an audio alert. That draws our attention to this market. When all the trade parameters are complete, we're going to get a triangle and a hash mark, just like it did right here. And that tells us that we have a tradable signal. And this is going to be true across the board, whether you're trading the Hawk, the Falcon, the Eagle, or the Raptor. The signals always develop the same way. I should also mention that the bar style that you see here is a little bit different than most bar styles. This is called the mean Renko bar style, and it's unique to Indicator Warehouse. It was actually specifically designed to be used on the DTS system, and it's a blending of range Renko style bars and candlestick bars, so it tries to incorporate all the best components of those 3 different bar styles. The nice thing about the mean Renko bar style is that I think it gives you a really good overview of who is controlling the market. It's very easy to see where the buyers are at. It's very easy to see where the sellers are at, who is controlling the market. Just a really good bar style, I think. Okay, we're going to go over these tools here just quickly. You saw we had a Raptor or a Hawk scalping signal develop just as we were watching it, and that one went on to reach our high probability profit target, so a profitable trade there right out of the gate. Here is our Falcon Swing Trader, and you can see slightly different look, but the signals all develop the same way again. We're going to get this warning dot when the signal starts to develop, along with an audio alert. Once the signal is complete, we're going to get a triangle and a hash mark. And that tells us that we now have a tradable signal. It's time for us to make a decision. As with the hawk, the falcon also looks for signals to have confluence. In other words, and I don't think I mentioned this to you on the hawk, you're going to notice here the hawk, pardon me, generates a lot of signals through here. This part down here, we wouldn't actually take these signals because, well, everything is out of sync. Unlike the signal here that we were watching where everything came into sync. So we're looking for things to be in sync. So we have green bars, we have green trend lines, we have a green filter, green signal. That tells us that we have a pretty strong buying opportunity. All right. Here in the falcon, we have a similar thing where we're looking for, once again, everything to be in sync. Generally, we're following our trend line for our directional bias. But here too, we would like to see the bar colors in sync, the trend line in sync, the filter in sync, and of course, the signal in sync. So this would be a pretty strong signal on the falcon. And you can see that we've had some nice follow through from that. I think we've probably hit our high probability profit target. If not, we're pretty darn close. Yeah, looks like we just hit that. So another profitable trade right out of the gate, which has been the NASDAQ for a little while here now. It seems like you can almost take the first signal that it produces and just hang on. This tool here is our Eagle Trend Trader. And with the Eagle Trend Trader, what we're looking at is we have this band that runs through the tool, and this band gives us our directional bias. No, this is not an Ichimoku cloud. People always ask that. I know it looks like it, but it's not the cloud. This is just a trading band, which gives us, like I say, our directional bias. So when the soft edge is below the hard edge, this is what we call the hard edge, we're looking for selling opportunities. So we're looking for sell signals. And once again, for the most part, we're looking for everything to be in sync. We're looking for red bars, we're looking for a bearish filter, or pardon me, a bearish band and a bearish filter. You probably notice the other tools also have these momentum filters down here, and they're just that. They're to help gauge market momentum. And we're just looking for everything to come into sync. And when it does, we have a tradable signal. Now, each of these tools have been specifically designed to pick up their own market environment. This is not simply a case where we've taken like what most people tend to do when they try to approximate a scalping environment and a swing trading environment and a trend trading environment. They'll take like a 5-minute chart and they'll use that to scalp. And then they'll trade a 15-minute chart for swing trades and an hourly chart for trend trades. That is a very crude approximation of what is going on here. These charts have actually been specifically designed for each of these market environments. They use entirely different programming. And there's a lot more programming going on than what you see here on the surface. They've actually been stripped down a little bit to try to make them easier to interpret. Let's take a look here at the Raptor, which is actually a blending of the 3 different tools. We've taken components of the Falcon Swing Trader, the Eagle Trend Trader, and the Hawk Scalper and incorporated them all into this one tool. Now, a lot of people like the Raptor because of its simplicity. A lot of people are just used to watching one chart and that's kind of where the Raptor has stemmed from. But you can see the Raptor also generates signals entirely the same way. I know the bar colors are different, and yes, you can change the bar colors. Some people don't like the blue and the fuchsia, so you can change them to whatever you want. But you can see the signals developed exactly the same way. We get our warning dot when a signal begins to build. We get an audio alert, and then when the signal is complete, we get a triangle and a hash mark. And we're looking here also for everything to come into sync. So very simple to use. We've got the blue bars here. We've got a bullish band. This band has actually been incorporated from the Eagle Trend Trader. And we have a blue filter. This filter on the Raptor is actually the entire Eagle Trend Trader programmed into this filter. The bar colors are driven primarily by the Hawk scalper, and the main engine behind the Raptor here is the Falcon Swing Trader. But you can see we've incorporated a lot of the tools, and we do get some pretty solid signals coming out of it. This is something that we were looking at yesterday. You can see we had here a trend change signal. Everything fired blue, and you can see we had a great result coming out of there. All right, let me clean this up a little bit. All right, so this is your Raptor tool, and you're looking at this and you're seeing all these signals here, and I know you're wondering, well, why would we not take these signals? There's certain signals that we tend to focus on, that we tend to give preference to over other signals. We do have high probability signals for each, and let me just show you what one of those cheat sheets look like. This is our Hawk cheat sheet. So you can see, in spite of having a lot of different signals, there's really only 5 signals that you're interested in, and they're fairly easy to spot. In the Hawk, for instance, your first signal, that your highest probability signal, is this first micro-macro crossover signal. And that occurs when the micro line, that's this thin one, crosses over the macro line, and it generates in this case, a buy signal. Very, very high probability signal. After that, we have a macro pullback signal that we look for. And the macro pullback signal is essentially a signal that has moved back to the macro line, and it's very easy to identify because the micro line changes color. Again, very high probability signal. Then we also have our 4-arrow consolidation signal. Occasionally, as I'm sure you've noticed, the market will tend to go sideways for a little bit, and the Hawk will signal 4 times, and we're usually interested in that 4th signal, and the market will normally take off on that 4th signal. Some of the more aggressive markets like crude oil, we're only going to get a 3-arrow consolidation before it actually bolts. Then we have our post 4-arrow consolidation. You can see this one was also a macro pullback signal. We tend to only get 2 macro pullback signals within a trend. So when we see a second macro pullback signal, that gives us a pretty good idea that maybe this trend is starting to soften. And last, we have the red bar buy, or its bearish counterpart, the green bar sell. This is usually a signal that occurs near the end of a trend. It tells us that the trend is softening, and it is also our counter trend signal. So it's a signal that we can take either with trend, or we can sell the failure of it. And you can see here was a pretty good example. I have a feeling it got high enough to hit our high probability target, turned on its heels, and then gave us a selling opportunity also. So we have unique signals like that for all the tools. That was just the Hawk. Our high probability signals. In the Falcon, for instance, we have a high probability signal, our trend change signal, which is this one which occurred right here. And it's easy to identify. It happens when the trend line changes color, and it's essentially the first signal where everything is in sync. You see here we have a trend line, a trend change signal to the downside, and even though it struggled, I wonder if it got low enough to find our target. Not a signal I would have been that interested in taking because it is counter trend, but let's just see whether or not we got low enough to hit our target. Oh, come on, get down there. Oh, a little bit of struggling, but we finally hit our profit objective before the market turned. We do have high probability targets for each of the tools, and you will be amazed how many times the market will hit the high probability target and then turn around. Let me see if I can find you another high probability signal. Ooh, this one right here. This is called our late filter entry signal. And the late filter entry signal occurs when the filter changes color, but the trend line does not. So again, pretty easy to identify. Very high probability signal. Very high probability signal. Here's our trend change signal down here. So you can see that one was also profitable. Nice thing about these tools also is that they're pretty good at identifying market chop. People are always asking me, Eric, how do you trade a choppy market? You don't. You don't trade a choppy market. It's very, very difficult to trade a choppy market. I know there's different strategies for trading chop. You know, you sell when the market gets up here, you buy when the market gets down here. Unfortunately, these types of strategies are always easier to do in hindsight rather than real time. But for me, a lot of it is just being able to identify the chop. So when I'm looking at my Falcon tool, for instance, and I see that the trend line looks like a roller coaster at Six Flags, and I've got my filter breaking up here like a checkerboard, then that's probably telling me that I really don't have a whole lot of directionality to this market, and maybe I'm better off just identifying the range and waiting for the market to get outside of this range. Because once the market breaks the range, it will generate a sell signal. Okay, so we're still, or a buy signal, whatever the case may be. So you'll see we finally broke the range up here. And lo and behold, we generate a buy signal. We actually got an early buy signal here, but we got another buy signal here. So you don't, probably the hardest part about trading range or range-bound markets with these tools is just having the patience to sit it out. I know it's an ugly word among traders. Traders think that they need to be trading all the time, but honestly you don't. Here's the hawk, and when you see all these yellow bars building through your hawk and you see your filter doing this, you are in a range-bound market. Just don't touch it. It's not worth it. Just stay away from it. Let everybody else chew themselves up. You don't need to be in there. Wait for it to get out. Here, let's take a look. So we can say, well, we've kind of got a trading range. Kind of started going nutso around here. And lo and behold, we break outside of the range. We get our characteristic little breakout and retest, and look at that. We come back with our first micro-macro cross signal, right? The micro line crosses the macro line. This is the first signal where everything is in sync. Very high probability signal. This is a signal I'll almost take without exception. And then away we go. And here's our macro pullback signal now. Good question here from Walter. Walter asks, which bird is best to get for a newbie? Well, if you're only going to focus on one, and here I'm going to give you Adam's email address right now before I forget, because he's actually got like a quiz, a series of questions that will help define what type of trader you are and which of these tools might be best suited to your trading style. Because we all, as individuals, have different trading styles, right? There's certain things that we can tolerate, there's certain things we can't tolerate. If you're the kind of person who can, get in and out of a trade and hit your profit target and not care that the market goes on without you, well, then maybe the scalping tool is the best one for you. If the Falcon is very popular because it's a swing trading tool, so it has slightly higher objectives for a trade, and it will try to take a little bit more meat out of the trade. And then, of course, the Eagle Trend Trader is designed to try to hang in there a little bit longer still. So here we had our trend change signal, and you can see we've hit our high probability target there. Because the tools have been designed to pick up different environments, the problem with only having one, of course, is that you might miss some of the signals. So for instance, let's say you have the Eagle Trend Trader, great tool, but not exactly the best tool to try to pick up scalping trades. So if the market is being a little more difficult, like it was yesterday, not getting as much follow through. I'm not sure we had an Eagle trade yesterday in the NASDAQ. I know we did on the Dow, because the Dow was actually moving better. But if this were the only tool I had and I was watching the NASDAQ, I may not have had a tradable signal. In fact, let's take a look here. Yeah, this is kind of what we were looking at yesterday, and you can see it's just a whole lot of nothing, right? A lot of sideways action, our filter breaking up, no real clear signals here. So that's the danger with having just the one tool, is that you may end up sitting out on some opportunities. But it is a little bit of a balancing act. As I say, you've got to take into consideration your own personality as a trader, what you're comfortable with, and then pairing that with the best tool. I suppose the Raptor has been very popular for that reason also, because it is a blending of the three tools. I think some people feel that the Raptor kind of fits their need there. But please send Adam an email and request that. I forget exactly what he calls it, but there is a test that he has, a personality test that will help. And it was actually designed by a psychologist, so it's a legit thing. But it will help you identify whether you're more of a scalp trader or swing trader or trend trader. It's kind of interesting to do just for the heck of it too. So if any of you have ever wondered what type of trading style best suits your personality, shoot Adam an email and ask him about that personality test, that trader personality test. But that's a great question. Thank you for asking it. Let's see, what else can I tell? Oh, yes, let me not forget perhaps the most important tool of all. You've no doubt noticed this tool here on the right side of my screen. This is the Trade Manager. Now, the Trade Manager is a very important component to your trading success. you see a lot of traders just get hung up on the signal, right? A lot of traders are just focused on the signal. They think, oh, if I could just tweak out, my losing signal, I'll be a successful trader. I'll be a gazillionaire. So then they start throwing different indicators on their charts, right? That's where it begins. And don't lie to me. I know you've all done this. And so sooner or later, your chart ends up looking something like this. And I think this was actually a student's chart. Somebody actually had this chart, and they were trying to trade it. And you can see it's impossible to trade. You've got a whole slew of moving averages on here. You've got Donchian channels. You've got the MACD and different oscillators, all in an attempt to tweak out a bad signal. But all you end up doing is you throw so much junk on your chart that you can't make a decision. Professional traders and money managers know that the signal is only part of the trading equation. Not only do you need a reliable signal, I'm not going to tell you a reliable signal isn't important, but the reliable signal is only part of the trading equation. There's actually 3 parts that you need. You need a reliable signal, you need a management system, a way that you're going to manage your trade once you're in it, and you need correct money management. Now, most traders are focused solely on finding a good signal. Some traders are smart enough to realize that, hey, I need a way to manage this trade once I'm in it. But very few traders actually realize that you also need to have a money management system. And Sam is asking, could we take a look at the euro or perhaps the pound? Sure. We'll load that up while I'm talking about this. So what most people end up doing is they end up risking far more than they can afford to lose. And after a short while, they bust their account and they wonder what went wrong. And before we get into that too much more, Sam was asking here, can we take a look at the charts, the 6E, the pound, or the 6A during the London Open? Okay. So this is the pound. This is on the hawk right now. This is our scalping tool. So the London Open was somewhere around here. You can see not a whole lot going on. A lot of sideways action, actually. Not really a tradable signal last night. Not as far as the hawk is concerned. We didn't get a signal until right here, our first micro-macro cross signal, which had a little bit of follow-through. So very choppy there in the hawk. Let's take a look here at the Falcon. Oh, the Falcon did have a sell signal. So you see, here's a good example of the different tools, how they're programmed differently. Even though the hawk scalper was not giving us a signal, the Falcon swing trader did pick up a swing signal, and we did have a nice little move here to the downside shortly, about an hour into the session. This is on the British pound. And then we had a trend change signal come around the middle of the session. Took a little bit of heat on it, but it finally ended up trading a little bit higher. Let's see what we have on the Eagle. Oh, not a whole lot going on the Eagle, at least not the last couple of days. You can see back here on last Friday's session, we had a nice trend change signal occur right here. Had a second chance to get in here, and a nice little sell-off going on there. When your bars, when your daybreak lines start to get a little bit tight like this, that tells you that your brick size is a little bit too big. And what you can do is you can actually adjust your brick size. And if you ever have trouble with this, you can let us know. We have default brick sizes, And before everybody starts writing me saying, what brick size should I use for such and such market? You should know that 99% of the markets will use the default brick size. But occasionally the markets hit a little bit of a skid where they start not trading enough during their ranges. So in those cases, we'll temporarily dial down the brick size. And all we're looking for is just to expand the session so that we've almost got the width of our screen here. So you can see we're getting a little bit better. It's still a little tight, but it's doable. We're only looking at a couple of days here that are out of sync, and they're only out of sync because the market was lacking direction here on our eagle. But you can see how a couple of days ago we had very nice trend change signal. We actually had a rule of 3. This is one of our eagle signals, which is our counter trend signal. So we had a rule of 3 signal that fell off. So you could have either sold it from here, or we did get the proper trend change signal right here also. And then if we go back here, you can see we had another trend change signal, and good progression out of that one also. So that's the pound, and I know the pound can be a little bit on the wacky side. Here we'll take a quick look at the eagle, or pardon me, the euro. Okay, and you're going to notice that, once again, the session break lines are going to get a little bit tight. That's because the euro trades at 12.50 a tick. So for instruments that trade at 12.50 a tick, we actually go from our default 6, 8, and 12 to 4, 4, and 6. So on the eagle, I'm going to be running a 6-tick mean Renko bar. Oh, come on, work with me. There we go. On the Falcon, I'm going to be running a 4-tick. We'll look at that in just a second. And on the scalper, I'm also going to be running a 4-tick. So this now is the euro, and let's dial it back here to the London Open. Not much out of the open. You can see we had some choppiness. We did get a first micro-macro cross signal here about 2 hours into the session. A little bit of a sell-off there. Ay, look at that session. That is totally choppy. Oops, sorry, that's the North American time. Let's go back here. Oh, the Tuesday session was a little bit more cooperative. So London Open right about here. Ooh, look at that. Got a very nice first micro-macro cross signal. Great follow through on that. Came back with a macro pullback signal or a 3-arrow consolidation, however it is you would like to see this particular signal. Either way, it did continue lower. We had a nice little sell-off there. It's certainly enough to reach our profit objective, and then it looks like the market turned and went the other way. Came back. I know this is annoying when this happens. It is rare that the market bolts like this without giving us a signal. But you can see it did come back and give us a macro pullback signal right here, which eventually had nice follow through. So there's the euro on the hawk. Let's take a look at the euro on the falcon. Again, this morning, not a whole lot going on until about a couple hours in where we got a proper trend change signal right here. A little bit of follow through on that. Let's go back to yesterday's overnight. And you can see the falcon was generating some Pretty nice signals. So London open right about here, got a trend change signal. My goodness, that would have been, well, that would have been my day right there catching that move. But if you chose to hang on a little bit more, oh, we had an early trend change signal here to the upside. So once again, the Falcon signaling a little bit earlier than the Hawk Scalper. And then the Falcon, honestly, we would not have taken these because of the trend line change through here, but you still pick them up on your Hawk. So it's not like you were shut out there. Let's take a look at the Eagle and the Raptor. So here's the overnight, nothing going on the Eagle. Let's go back to yesterday's session where we had the London open and we had a with trend signal off of a hard edge bounce. This tends to be a fairly reliable signal. Whenever the market encounters the hard edge of the band, we do anticipate some sort of reaction. So nice little follow through there. So the euro much more cooperative yesterday than the British pound. Here's the Raptor, and let's go to the London open, which would have been right here. Oh, look at this. The Raptor actually gave us a signal this morning out of the London open. So it comes out of the band. Everything is in sync. We've got a red signal, red bars, red filter. So the Raptor picked that one up. If we go back to yesterday's overnight, so where were we? So here's the open, nothing going on till the Raptor gets out of the band. No, actually, am I looking at the right time? Yeah, there was nothing going on there on the 6th. Did I go too far? Well, we did generate a signal here, but that wasn't until close to the North American Open. Maybe I needed to go back one more day. Well, here's the, pardon me, here's the London Open from the 5th, which would be last Thursday. Maybe I went back too far. Trend change signal, so notice our band changes direction, so our directional bias has changed. And here we have our first in sync signal right here. Blue bars, bullish band, a buy signal, and a blue filter, and nice progression out of that. And I'll do just one more since we're here. And here is the London Open over here. So the Raptor not giving us a whole lot until, again, closer toward the end of the session where it actually generated a signal right here to sell. You're going to notice that with the Raptor sacrifices quantity of trades for quality of trades. The Raptor is not the kind of tool that's going to be ultra fast. If you're looking to have more market input, then tools like the Hawk, the Falcon, and the Eagle might be more to your liking. Okay, while we're waiting for that to load, Devendra is asking, what time frame are you looking on your charts? Well, they're not time frames. They are mean Renko bars. So they're actually a range style bar, but they're more sensitive than a range bar or a Renko bar. They've actually programmed in some of the characteristics of candlesticks so that you get a little better feel of the price action. So I'll just wait for that to finish loading. So on our scalping tool, for most of the markets we're looking at, we're going to be looking at a 6-tick brick. So whenever the market moves 6 ticks, it's going to build us another brick. And then for the Falcon Swing Trader, we'll be looking at an 8-tick brick. And for the Eagle Trend Trader, the default will be a 12-tick. Although every once in a while, like I said, you might want to adjust the brick size ever so slightly, but it's rare. It's rare that you need to do that. These default brick sizes will work for almost all the markets you're interested in trading. Now, as far as customizing your tools, the Raptor is probably the tool that is most customizable for those of you who like to play with things and tweak. The Raptor has the most adjustment to it. So you can adjust your cloud. This is taken from the Eagle, that trading band. You can adjust your filter, and you can also adjust how your brick sizes print. So that gives you a little bit more customizations than you would have on your other tools. The Hawk, the Falcon, and the Eagle are pretty much locked in their programming. About the only thing that you can change on those is the brick size. You can't really change too much else on those. Okay, Sam is asking, how come after a circle the next bar doesn't give a trigger, the bar triangle, when the bar was going the same direction and color? Well, I'm not sure exactly where you were looking, but it is, just as a for instance, let's say, I know this is probably not the one that Sam is asking about, but every once in a while, and it's rare, but every once in a while you'll get a warning dot, and we're going to pretend here for a moment that, let's say the market continued a little bit lower here. How come we don't get a triangle and a hash mark saying that this is a sellable signal? It's not, but we're pretending now. It's very, very rare, but occasionally the market will do something a little bit funky and the signal will cancel itself, so it won't actually print the remainder of the signal. As I mentioned, there's a lot going on in the background here. There's actually about a half a dozen trade parameters that have to be met before the signal will print. Certainly a lot more than what you just see going on the chart here. Sometimes the warning dot will disappear as it did here. This signal will be printing just like this one does. The Eagle tool, however, sometimes will print the warning dot, and then when all the signals parameters are met, the triangle and hash mark will print and the warning dot will disappear. But that doesn't mean there wasn't a warning dot here. But to answer your question, Sam, sometimes the market will do something a little bit silly and it will cancel the programming. All right. Oh, I was telling you guys about the trade manager. I was telling you how important it is to have not only signal generation, but a way to manage your trades and a way to protect yourself money-wise. The trade manager has a built-in stop strategy. Actually, it has 16 different stop strategies to choose from. These are all fully customizable, so you can change them to your liking. And they range from moderate to very conservative to ultra aggressive, whatever it is that you feel you need for the current trading environment. Nice thing about these is you can also change them while you're within a trade. So sometimes I will start, say, with the ATR strategy, And then as the trade progresses, let's say we actually took this first micro-macro cross that we were looking at this morning, and I get into this trade, and as this trade progresses, let's say I'm no longer happy having my stop way down here, I can switch to a more aggressive stop strategy, perhaps like parabolics, which will be more aggressive with my stop and take me out should the market choose to reverse. So parabolics would have held me in until right about here somewhere. So very helpful tool. Nice thing about this stop strategy is that once it's engaged, it's really hands off. You don't have to watch the market anymore. The tool will automatically roll your stops for you. So that frees you up to look for other trading opportunities. When I was doing the profit runs, and those were times where I would, trade for a couple of months and just see how much money we could earn over a couple of months' time, I would routinely take trades in 2 or 3 markets, and usually on 2 or 3 different tools. I'd be watching 4 markets at a time. But because I could count on the trade manager to manage my trades and DTS to alert me to opportunities, like I would hear audio alerts so I could go look at the different tools, so I wouldn't be missing trades. Trade manager would look after my trades. That actually freed me up to just keep looking for opportunities. Once I was in a trade, I didn't have to worry about it anymore, because if the market reversed, I knew I had an active stop, and based on whatever stop strategy I was using, the market would hold me in or stop me out, whatever the case would be. The last component of your trade manager is this money management component. This is very important. Most people think that in order to be a conservative trader or to be careful, they need to trade fewer contracts. Most people think that if they only trade 1 or 2 contracts, they won't blow up their account. Well, kind of, sort of. You certainly will be risking less, but the problem with only trading 1 or 2 contracts is you may be risking less on a trade, but you'll also be earning less on a trade should the trade work out. So this is where Trade Manager really shines, because it will contain your risk to only 2% or whatever percentage you set of your trading account. Generally speaking, 5% or less is considered prudent money management. But the problem is most people start risking far more than 5% of their account, and they're not even aware of it. When I think back to one of my first trades, this is years ago. This is when you could still trade with a $2,500 account. This is like 20 years ago. I'll never forget, my first trade was in corn. I bought corn, and I had a $1,500 risk exposure on a $2,500 account. Like, that was insane. That's like, in today's dollars, taking a $20,000 account and risking $12,000 on a trade. Like, it didn't occur to me because nobody ever told me that was a stupid thing to do. Fortunately for me, the trade worked out, but obviously it could have been devastating had the trade gone the other way. I would have cleaned myself out in a single trade. That's what Trade Manager is designed to do. It is designed to prevent you from blowing yourself up while maximizing your earnings. I know it seems impossible, but it's true. Correct money management not only limits your losses, but it maximizes your earnings. Have you ever wondered why some traders just seem to make money hand over foot and you can't figure out what they're doing that you're not doing? And you go back to, scouring their charts and you're saying, what's that moving average that you have on there? And you think that it's all about the moving average. Listen, folks, if it was as simple as tweaking your moving average from a 20 to a 21 or a 13 or a 55 or whatever, we would all be multimillionaires. There's more to trading than that. Correct money management is a huge, huge component to your trading success, and it's one that most people are terribly ignorant about. Correct money management actually allows you to structure a trade in a way that you can eventually realize a profit on your trade. So for instance, most people, this is what most people do, is they'll say, okay, I'm going to be a careful trader. I'm only going to trade one contract. I'm going to enter here, and I'm going to keep my stop really tight. I'm just going to give it to the low, and that's going to be my trade. Okay, and I got a one-to-one trade, so this must be good, right? I'm going to make $50, or if the trade doesn't work out, I'm only going to lose $50. Okay, good for you. Trade goes higher, you made $50. Fantastic. Okay, how do you handle it if you're looking to trade for a living? Well, how do you handle it if you're actually looking to make money trading rather than just have it be a very expensive hobby? Well, you need to control your risk. And the way you control your risk amount is by only settling on a certain percentage of your account. Most money managers say that 2% is the ideal. It gives you enough bulk that you can trade decent position size, but it's also small enough that if you took 10 losers in a row, you're not going to wipe yourself out. And believe me, professional money managers know it is a very real possibility that you will take 10 losers in a row. So let's say we set up our trade on the same entry. Let's say we're going to use our stop strategy down here to cover our trade. And this is the exact same signal. You can see that I've got nearly $500 at risk. Now, before you start freaking out, $500 is a risk amount that I can afford based on my account size. This may not be the same for you. If you're trading, say, a $10,000 account, 2% of $10,000 account, this would be $200. Right? So it's an amount that you can afford to lose. But look at the difference here. I'm trading 7 contracts, you were trading 1. If this trade works out, I make $350, you make $50. Let that sink in for a moment. You make $50 on your trade, I've made $350. And at no time have I risked more money than I can afford to lose. Yes, it's true, you lost less. If this trade turned tail, you only lost $50, I lost $500. And I know you're saying, nah. But that's not the point. The point is when you do hit a signal that wins, I have earned 7 times as much money as you have. If I do this signal twice a day, I have made $700 versus your $100. I can make a living on $700. You can probably not make a living on $100. Now, here's the other part of the equation that a lot of people miss, is a lot of people think they've got to do all this stuff about risk-reward ratios and stuff, right? I got to make my trade, I got to have at least a 2-to-1 risk-reward ratio. So if they look at the resistance up here and they say, okay, that's going to be my profit target. I'm going to be really smart. I'm only going to risk 1 contract. I'm only going to risk $25 to get my 2-to-1. Well, what are you doing? You're strangling your trade. You're not giving this market any room at all. If it backs up even on you for a tick or two, you're stopped out. And while it may have ended up being a good trade, you could have been left behind. For me, there's only one thing worse than a losing trade, and that is a winning trade that you got stopped out of prematurely because your stop was too tight. All right, so I know right away people are saying, well, Eric, I can't afford to risk it way down here. Like, look at that. That's $200 per contract. I can't afford that kind of risk. All right. Well, what if we let Trade Manager decide? What if we're risking 2% of our account? And what if we choose to enter below this swing low? Okay. Well, our risk is about $400 here. I've got to do this a little bit different because I'm trying to get the rounding the same. Okay. Notice our risk amount is $475, about $500 again. If I have my stop really tight, my risk is still $500. If I have my stop really loose, my risk is still $500. My risk amount never changes. What does change is the quantity that I trade. Now, which trade has the higher probability of success? The trade that's set up down here, or perhaps the trade that I'm setting up really, really tight like these? Well, the answer should be obvious. The trade that has the highest probability of success is the one with the biggest stop. Right? If I have my stop way down here, chances are very good that the market will hit my profit target before it hits my stop loss. This is a very important concept to get your head around because there's no need to strangle your trade. There's no need to make your stops ultra tight to try to maintain some sort of fictitious risk-reward ratio, which doesn't help you anyways. As a trader, you should be far more concerned with probabilities. Then you should be with risk-reward ratios. Okay, I was just checking some of your questions. Michelle is asking, Eric, is this system also working for shares like Facebook, etc.? Yes, absolutely. And we'll see here in a moment whether I still have my equities data feed. And I'll pull up Apple or Google or something for you. Sam is asking, is the first target automatically calculated by the software? Well, Sam, what a fantastic question. I'm so glad you asked that. This is a feature here where you can preset your profit targets, and you can preset as many as 3 profit objectives, and you can even tell the software how you want it to divvy up the profit targets. So for instance, right now I have target 1 set at 10 ticks, and I'm all in, all out, 100% on target 1. Well, let's say I want to take, let's take half on target 1. And you're going to notice that the other half defaults to a runner. Let's say I want to take a second target, and I'll take 25% of my position on target 2. Well, now I need to set target 2. Let's say I set target 2 at 30 ticks. And I'll leave 25% on as a runner. So what happens is, let's say, this isn't a signal, but let's say I just set it up like this. You can see that I'm going to trade 6 contracts. My risk amount does not change. Target 1, I'm going to peel off half my position. Target 2, I'm going to take another quarter of my position, and that will leave, what is that? That's 4. That will leave 2 contracts in for a runner. The software does round down when it's taking off contracts, by the way. So yes, you can preset your profit objectives, or you can also do it manually. So I changed this to click targets enabled, in which case I can just choose my target wherever I want. And it will still manage the trade as I've predetermined. So a lot of times, especially lately, the market's been very active. A lot of times what I'll do is I'll take part of my position off on first target, and then I'll leave a little bit on as a runner. And you can preset all these. You can save templates So if you have a favorite setup, you can save all this exactly the way you want. There's also 4 order styles. The stop is the one I tend to favor the most, but there are limit orders and stop limit orders as well as market orders, or you can just use the market buttons up here if you choose. We also have a close button, which is kind of like the panic button, and a break-even feature. So when you're in a trade and say the market has gone in your favor, you can hit your break-even button and it will automatically, in this case, take you to break-even +1 or 2 or 3 or whatever you choose to set. And we also have an OCO function. One cancels other. These are great when the market is going sideways, as it is right now, or, oh, we just missed the crude inventory report. A lot of times going into crude inventory, let's bring crude oil over here. So the inventory report was just released. Oh, we didn't really have much of a range today anyways. Sometimes crude oil will end up going a little bit sideways before the inventory report is released, which makes it a great opportunity to use this OCO feature. I'll show you here on the NASDAQ because it'll work the same. And what you do is you click OCO to turn it on. So when it's blue, it's on. We're not using the trade manager now to enter it. We're actually just going to click on the chart and we're going to enter our buy and sell orders. And these orders are live the moment you put them on the chart. So I tend to place them away and then drag them in. So let's say we've identified a sideways channel right here. Let's say we're looking at this bit of market congestion and we're going to say, okay, I'll trade this on a breakout and we'll enable our stops. We'll bring this in a little bit tighter, see if we can't get filled to the downside, and you'll see how the trade manager will manage our stops. Okay. That wasn't quite right. Let's try that again. Oh, I know what happened. Okay, I'm going to put my stop up here. Let's. Come on. Come on. Just a little lower. You know you want to. Come on. I'm trying to make a point here. Oh, it's running away on me. Okay, go figure with the NQ. But you'll have to take my word for it that when it fills the order, your stop will automatically go here. Oh, I know what I can do. I'll just hit a sell market. Okay. So we're in this trade. Oh, I'm going to roll my stop back here because I want to show you how it rolls the stops lower. Oh, we also have this preview button. So if you're wondering how the stop strategies are comparing to each other, you can hit the preview button and it will give you an opportunity to see where your stops would be at. This wasn't a signal, by the way. I'm just trying to get the market to move a little bit lower so that you can see how Trade Manager automatically will roll your stop for you. Okay, almost. Come on, finish this bar just a touch lower. There we go. So I'm going to enable the stops. Hopefully this bar will finish lower, and then you'll see how Trade Manager will start to roll the stops. The window through here shows us your active position. We're short 1 at 42.89 3/4. Shows us our open profit. If you're like me and you find that distracting, you can also toggle through it. So you get dollars, you get ticks, you get a percentage of your account, or you can just turn it off entirely. Come on, just get down there a little bit just so you can see how it will roll the stop. It wants to go lower, it just doesn't know it yet. think we're up against yesterday's highs. I think that's what the problem is. But notice here on the mean Renko bars how it's very obvious there's active buying going on here at 42.86. Right? We know there's some selling up here at 42.94 and some more buying going on here at 42.92, give or take. So if the market continues lower and hits down here around 42.86, well, we know that all these buyers have their stop loss orders right down here, don't they? So if the market starts to get down here and tag all these stop loss orders, well, these stop loss orders are actually sell orders, aren't they? In which case we should see a rather large move to the downside. So that's what I mean, how the mean Renko bars are actually very helpful for helping you determine who is in control of the market. They're not going to allow me to show you how this works. They're going to go up there and tag me out. Oh, maybe I can go to a percentage. Nope, percentage is on the wrong side. Okay, well, I'll find another example, and you can see how the Trade Manager actually will roll the stops for you automatically. It's a great feature. So right now, not a whole lot going on in the NQ. We had some great opportunities in crude oil this morning. Let's bring over the crude oil chart. Crude, of course, trading back below $50 a barrel. So crude oil opened right about here. Drifted a little bit. We actually didn't get our first micro-macro cross signal until well down here. Took a little bit of heat on it, but we came back with a macro pullback signal. Now, one thing I will tell you, when you see the market move a long ways like this, normally we expect, and this is something that you'll get a feel for. Like here's a first micro-macro cross signal that is a little bit more textbook. So the micro line, macro line crosses, everything goes out of sync, everything comes back into sync. That's actually the key behind the first micro-macro cross signal. It's not the fact that the trend lines cross. Sometimes they get close to crossing and don't actually cross. But it's when everything goes out of sync. So our bars are out of sync, our trend lines are out of sync, our filter is out of sync, then everything comes back into sync. That's what makes this such a reliable signal. But it normally occurs a little bit sooner, like this one did here. I compare this one here with this one here. You'll see that this one has retreated a long ways down, and when I see that happen, I tend to be a little bit more conservative. I'll do a couple of things. I might choose to enter below the low instead of the hash mark. I only need to give up 2 ticks to enter below the low, and I'll probably choose to risk my stop a little bit higher, because I know that because it's come down so quickly, it may actually develop into a macro pullback signal. Here's one more feature of Trade Manager that I haven't touched on yet, is if I try to risk too much on a trade, Trade Manager will not allow me to take the trade. You see that? It keeps telling me, no, Eric, you can't afford it. Wait for another signal or dial up your risk amount. But since this tool is here to protect me from doing something stupid, I would probably forego the signal and wait for the next one. But this one, like I said, there's a couple things you can do to protect yourself. You can enter below the low. You can wait for what we call a second push entry, in which case we would actually let the signal trip, show us the range of the bar or the market, and then look to enter. So this is what a second push entry would look like. We get the signal, and this isn't actually a signal we would trade because it's not one of our 5 signals that we're looking for. But let's say we were looking at it anyhow. So we get the signal, we let it engage, and now we wait for the second push. Well, here's the second push right here. The market has shown us its current limit, and this is a trade that we can actually frame a little bit tighter. because we know in order for the market to fill us here, it has to have renewed momentum. And so you can see it actually retreated from there. Oops, sorry. Retreated from there and didn't come back until it gave us a proper signal. So that was one way to avoid getting a bad fill. But let's go back here to this first micro-macro cross signal. And let's say I'm going to enter it below the low. I'm going to cover it up. Oop, where was I covering it? So I'm going to look to enter below the low, cover it up here somewhere. So they bring me in. See, had I waited for the second push, I would have placed my order below here now. But at any rate, I'm expecting that it might develop into a macro pullback, so no big deal. There's the one macro pullback, there's the other macro pullback, and away we go. And we hit our profit target. So it's all about structuring high probability trades, giving yourself a chance to realize a profit before you get stopped out. Right? That's the name of the game. Here's crude oil on the Falcon this morning. And where was the market open? Right here, 6 a.m. So a little bit of a fall off. Oh, we had a couple of funky signals here. Didn't get a proper signal on the Falcon until right here. This trend line kept waffling, going back and forth, which was unfortunate. But we did get a late filter entry signal here, and it looked like that was a pretty good move regardless. Remember too, folks, that you don't need more trades to make more money. Like here on the Falcon. Okay, let's take this trade, crude oil. I'll set it up. I'd probably set it up something like this. Okay, we come down, we hit our profit objective. And crude oil, I actually double the profit objective. So normally for the Falcon, we have a $100 target instead of $200. So let's say with our $100 target, let's say, and crude oil is going to be a bad example because it's an expensive market, but the concept remains the same. And those of you who have attended my trading rooms before and heard me talk about money management will be familiar with this example. But let's say you took one trade a day and you made $100 on that trade. If you traded 25 contracts, you would make $500,000 a year. $500,000 a year on one trade for $100. Do you see how you don't need the frequency? You just need the reliability. Now, I know you're saying, well, Eric, I can't afford to trade 25 contracts. Okay, fine. What if you traded 5 contracts? What if your account allowed you to trade 5 contracts? Okay, it's probably not going to be possible in crude, but certainly maybe on a market like the NASDAQ or the mini Dow at $5 a tick, you might be able to trade 5 contracts. And if you took one trade a day for $100, you would earn $100,000 a year. Not too bad. Certainly not chump change. Okay, you say, Eric, I can't afford 5 contracts. Well, what about if you trade 3? If your account size allowed you to trade 3, you would make $60,000 a year. I know a lot of people working a lot harder than finding one $100 trade to earn their $60,000. If you traded 2 contracts, you would make $40,000 a year. How would $40,000 change your lifestyle? Even if you still went to work at the job, wouldn't work be a lot more pleasant knowing you had another $40,000 coming in? What if you traded 1 contract once a day for $100 profit? You would still make $20,000 a year. So don't think for a moment that trading is about finding more signals. More, more, more. That's how it is in the non-trading world, right? In the non-trading world, the more you do, the more you earn. You make more widgets, you make more money. You make more sales calls, you make more money. That's not true in the trading world. Sometimes more is less in the trading world. Sometimes in the trading world, and anybody who's been trading for a while can attest to this, you can be up, $500, $600, $700 on the day, take 2 stupid trades, and all of a sudden you're in the red. You're down $300 or worse. And then you're kicking yourself around the block. Why didn't I stop trading when I had $700 to the good? It's not about frequency, folks. It's about getting a solid signal and correctly capitalizing yourself so that you can take advantage of that signal, and at the same time never risking more than you can afford to lose. Like here out of the open on the NQ today, boom, $250 in the bank, running 2 more contracts, and we'll just go with the ATR strategy. The parabolic was more aggressive, but we get out here at looks like 42.86 half, and let's say we got in at 42, well, we'll say 42.81 half for easy math. That's 5 points. That's an extra $200. So you made $450 on one trade. And that's just the one tool. Your day could be done right there. Come back tomorrow. Do it again. All right, I'm just taking a look to make sure I haven't missed anybody's questions. Jim's saying the advanced decline is off today. We're in a bit of a bear market, but the NQ seems to keep holding its own. The NQ is trying to pull the rest of the market higher. Michelle asked about stocks. Let me see if I can get Google on here. I don't know if my equities is hooked up or not. Oh, it doesn't. Oh, there it is. I'll go over some of these secondary tools here in a moment also. Now, the stock market, you might have to tweak a little bit based on the share size. If your signals are producing too quickly, you may need to increase your brick size so that you can actually take advantage of the signals. But here's Google on our various tools. And yes, I have a feeling that the brick size is going to be a little bit small here because I just saw all this flash here in a matter of seconds. But the signals, the signals stay the same. Here's the first micro-macro cross to the downside. Very nice progression out of that. Here's a macro pullback signal, and remember it's characterized by the micro trend line changing color. But I think 6 ticks is too small for Google. I would have to do a little bit of testing here. Here's the first micro-macro cross to the upside. First micro-macro cross to the downside. So lots of opportunities here. Mike Filigera is... he likes to trade the stock market with the DTS system. And now I see why, because Mike Filigera, and Mike, if you're in the room, I'm not saying this in a bad way. Mike is very much a type A personality. Go, go, go. Get her done. Let's go. So getting a lot of signals like this would definitely be to Mike's liking. And let's take a look here at the Raptor. Oh, wow. Great signals out of the Raptor here. Here's a trend change, or pardon me, not a trend change signal, but the Raptor comes out of the trading band. Here's our first in-sync signal, which tends to be of Pretty reliable signal. Great follow through on that. Fantastic. A little congestion here. This is what we call a double pullback signal, where it goes into the band. This one actually worked into a triple pullback, but we see two pullbacks into the band and then it comes out and generates a signal. Here's a trend change signal. So just as the band was changing over, we generated a signal. Oh, lots of opportunities to the upside. Once again, the Raptor, not the fastest of tools. We had a little bit of a move here to the upside, and then it wasn't until here that we actually generated a signal. But once again, these signals seem to be coming maybe just a little bit too quickly, so I would have to refine the brick size a little bit on the Raptor. Oh, okay. Good night, Sam. Sam says it's in Australia. He's in Australia. It's 2:45 in the morning. Yes, you'd better get to bed. And Michelle's asking about the DAX. Let's take a look at the DAX. I think it's on here somewhere. There we go. Walter is asking about, is there any way that you can practice what I teach until he can purchase one of the birds? Well, the only room that we have open to the public right now is this Wednesday morning room. Monday, Tuesday, Thursday, Friday are reserved for DTS owners. But if you're looking, I know Adam was offering a payment plan before, so if those of you who are interested in these tools, they're not inexpensive, but you know, at the end of the day, it's like everything, you do get what you pay for. These are reliable signal generators. The money management system, I can honestly say there is nothing like that on the market today for the retail trader. This trade manager tool enables you to trade just like the guys on Wall Street. There's a fellow in our trading room, his name is Derek, and many of you will have heard me share this story before, but Derek was, you know, a onesie-twosie trader. He win a little, he'd lose a little. It wasn't until he got a hold of DTS and this trade manager tool that he started making money. And Derek will be the first to tell you, you will never make money just trading one or two contracts. And now not only is he trading for a living, but he's actually soliciting funds from other people to trade their money. Or actually, I should say they're coming to him to trade their money. It makes all the difference. But yes, email Adam, and I'll send everybody Adam's email again, adam@indicatorwarehouse.com. And ask him about the payment options. There are payment options available. All right, so let's see what we have going on here. It looks like for the most part, the YM, here's the mini Dow this morning. Not a whole lot. This is the Eagle, of course, moving a little bit sideways. Oh, let me talk about the secondary tools, and I know we have the DAX up here, and we'll take a look at the DAX in just a moment. But this tool that you see up here in the top left of my Eagle Trend Trader, this is called the Trade Forecaster. And the Trade Forecaster is an add-on tool. You can use this on any chart. It is not specific to the DTS system. You can use it on a time chart or a tick chart or whatever you're trading. And the Trade Forecaster attempts to forecast what the current market environment is and what the next market environment will be. So right now it's saying we're in a trending environment, and we're going to change over to a swing environment in about a half an hour's time. Now you can see we're not trending a whole lot at the moment. But when it's in a trend environment, it doesn't always mean this. It doesn't always mean that the market is going to take off like a shot. Very often it will, but not always. A lot of times what it means when it's in a trending phase is that the market will not make such wild swings, versus if it's in the scalp mode, you can expect some very extreme price movements. So if it's in a trend mode, you can probably run a wider profit target. You can probably get by with a tighter stop loss. And vice versa for a scalping environment. You should probably run a tighter profit target. Maybe go all in, all out. And likewise, you probably will need a wider stop. So there's a trade forecaster. Trade forecaster works much in the same way as a weatherman trying to predict what the weather will be. Fortunately, the trade forecaster is usually more reliable than the weatherman. And it's, the weatherman, he looks at barometric pressure and cloud formations and wind speed and humidity and all this, and he'll compare it to past information. So they'll say, whoa, in the past when the humidity did this and the clouds were so-and-so and the pressure was doing this, this is the type of weather we had. Well, Trade Forecaster does a similar thing. It looks back in the history of the chart and analyzes what's been going on, and it says, okay, last time market conditions were like this, this is what we had. And then when the market conditions change, this is what we have. So that's how Trade Forecaster works. Actually, a very helpful tool. Like I said, it's helpful for gauging what type of environment you're in right now, helping you to judge what kind of stops and profit targets you can be using. The Falcon Swing Trader on here, you've probably noticed these lines. This is the Ultimate Support and Resistance Suite. This is also an add-on. It can be used on any chart, so it's not specific to DTS. This is an assortment of support and resistance lines for the current trading day. No, these are not pivot points. No, these are not Fibonacci retracements. If they happen to coincide with a pivot or a Fibonacci retracement, it is a coincidence. We have an assortment of 21 lines here. So 10 above, 10 below. We have the median line here in the middle, which is the gold one. And then we have above and below, we have our primary resistance and primary support. And you can see the market's it did a pretty good job of forecasting where the market was going to find support. These are our secondary support lines, these pink ones, and where it might find resistance. Some people like to use these as trade confirmations. So if we get a signal, say to buy, they like to see that it's bouncing off of support. Some people will use them as profit objectives. So if we're bouncing off support, they'll maybe use the median line or the next support or resistance zone as a profit-taking target. And once again, these are add-ons. You can use these on any chart you like, not necessarily a DTS chart. And then we also have here on the the Hawk Scalper, I've put the Day Ranger. It looks like I need to add a little bit more data. Oh, I should have enough data there. What the Day Ranger does is it tells you the daily range and compares it to the averages. There should be a 30-day average here. I'm not sure why it hasn't printed. So you can see that currently today's range is around 200 ticks. Yesterday's range was nearly 450. The 5-day average is just around 270. 10-day average, again, around 270. And I have a feeling the 30-day average will also be around there. So the Day Ranger allows you to, again, it's a trade management tool. It's something you can use on any chart. But if you know that the average daily range is around 270 ticks and you're currently up to 200, well, you know the better part of the day is done. So what does that tell you? Well, that tells you that maybe you should be running a tighter profit target. right? If you're only expecting maybe another 50 to 70 ticks out of the day, maybe you should run a tighter profit target. Or if you look at this and let's say you look at it and you say, well, the average range is around 250 ticks, I'm going to set a profit objective of 20% of the daily range, in which case you would say, well, I'm going to run a 50 tick target. Or let's say you want to run 10% of the daily range as a stop loss, in which case you would run a 25 tick target or a stop loss. So as the daily range increases, you could use those same type of percentages to account for the volatility, the increasing volatility or the declining volatility. So for instance, let's say the daily range goes from 250 ticks to 350 ticks, and you're still running at 10%, you're going to allow 10% of the daily range as a stop loss to try to avoid the volatility. Well, now you're going to, instead of a 25 tick stop, you're going to have a 35 tick stop. Right? So helpful little tool. This is the DAX, which of course is the European Stock Exchange Index, or one of them. And let's go back here. Oh, the DAX was very active today. Let's go back to the market open, or the London Open anyway. Had a macro pullback signal here. Nice follow through on that. Here's one of these red bar buys. You can see we had follow through on that to the upside and the failure. Now, a lot of times I'll use the red bar buy just as an early warning because I know chances are a first micro macro cross will develop nearby and it's a higher probability signal. And lo and behold, that's exactly what we had happen right here. So we had the opportunity for a red bar buy. We have a first micro macro cross here for the sell. Oh, and we come right back with a 4-arrow consolidation. 1, 2, 3, 4. This is the only signal, by the way, that I will take off of a yellow bar, is a 4-arrow consolidation. So we have a 4-arrow consolidation there. Very good follow through off of that. Another macro pullback here. Took a little bit of heat on it, but it worked out. And did we have another 4-arrow consolidation? No, but we did have a green bar sell right here, which also worked out. First micro macro cross. Now, once again, this is one of these first micro macro cross signals where you might be saying, well, you know what, for the sake of a couple of ticks, I'll enter below the low. Try to cover above the high. In which case, you would have stayed out of harm's way. If you took it right on the tick, that trade would have reversed on you, and depending where your stop was at, possibly stopped you out. Now, green bar sells, like red bar buys, we get 2 green bar sells. That's usually a signal that the trend is weakening somewhat. Now, this is specific to the market as well. Markets like the mid-cap, that's the EMD, the mid-cap 400 on the S&P, will produce very strong signals off of red bar buys and green bar sells. But if I see 2 green bar sells within a trend, I start to get a little suspicious. Michelle is asking, it looks like there are many signals on the DAX. Isn't the system taking care for the tick frequency? What we're looking for, Michelle, is we're not necessarily interested in every single signal. And I know this is a little confusing at first when you start to look at it. You're saying, well, why is he not taking this signal? Why is he not taking this signal? Why is he taking this one? Why is he taking that one? Well, it's because we have certain high probability signals that we tend to focus on. And this will be true for the DAX, or for the Hawk, pardon me. It will be true for the Falcon, the Eagle, and the Raptor. These are the high probability signals on the Hawk. We tend to focus only on these 5 as our highest probability setups. one of them being the first micro-macro cross. Notice after the first micro-macro cross, I had another signal right here, which I did not take. Rather, I would wait for the macro pullback signal because it is a higher probability signal. Notice after the macro pullback signal, I had another signal, but I did not take that. I had the 4-arrow consolidation, which is a signal, again, high probability signal. I had another signal up here. Well, this one didn't engage. It wasn't actually until this one here, the post 4-arrow consolidation, which also happened to be a macro pullback. But all these signals through here, not too interested in them because they're not lining up with any of my 5 signals that I'm interested in taking. So likewise here on the DAX, I have a first micro-macro crossover signal, which I know to be reliable. This signal here does not fall into any specific category, so even though the hawk is printing a signal, it's not really a signal that I'm interested in taking. Why? Well, because I know at this point, chances are pretty good, after my first micro-macro cross, that I might see a macro pullback or even a 4-arrow consolidation, which is exactly what ends up happening. I get my 4-arrow consolidation. Okay, I have another high probability signal. This is my 4-arrow consolidation right through here. Oops. Oh, tool's not cooperating. Here's my 4-arrow consolidation. So I have something now which is a higher probability signal. That's something I'm interested in taking. Here is a signal. I suppose you could make a case that it's a first micro-macro cross, or sort of. But I'm already short from here, so I don't need another signal to get in. And depending how I'm managing this trade, I could still be in this signal. But to answer your question, no, we're not necessarily interested in every single signal. Rather, we're more on the lookout for the higher probability trades. Same thing with the falcon and the eagle. You know, we might produce a lot of buy signals. Like there's a buy signal up here. It never engaged. Thank goodness. We would have had to take a whole lot of heat on that trade. But it's not as desirable a signal as our trend change signal, which came down here. Right? The trend change signal occurs after the trend line changes, and it's a more reliable signal. Here's a trend change signal again to the upside. This one produced a little bit later than I would have liked to have seen, but it was still a trend change signal. Here's a trend change signal to the downside. Trend line changes color, everything comes in sync. Actually, you could also view this as a late filter entry signal. So 2 signals produced, one on top of the other. Here's another trend change signal. Again, a high probability signal. This is what we call a trend line touch, where it comes back into the trend line and then comes out of the trend line. Here's well, it went out of sync for a little bit, but the late filter entry signal actually produced itself right here and then ended up going higher again. So as with the hawk, the falcon has its high probability signals that we tend to look for. And of course, the same is true for the eagle, where we have signals like, well, we have our trend change signal, which is this one right here, where everything is in sync. The band flips over, everything comes into sync, and away we go. We have our green bar sell. So unlike the hawk, where the green bar sell and the red bar buy are actually weak signals, in the eagle, they're strong signals, and we encounter them when they intersect the hard edge of the band. So if I come into the hard edge of the band and I generate a green bar sell signal, I get a lot more aggressive with my trade than perhaps taking this signal right here, which doesn't really coincide with anything, right? The signal down here is neither a trend change signal or a green bar sell or a hard edge bounce. It's just a signal. Here's our trend change signal. Well, actually, that one didn't trip. The trend change signal came right here. Again, and it bounced off of the hard edge, so it had a couple of things going for it. So, no, we don't necessarily trade every single signal. We do try to focus on the higher probability signals. And I'm not... But very good question. Yeah, Jim says the YM sucks today. Oh, I think they're putting in a little bit of a rally right now. The DAX kind of falling flat, but that's kind of par for the course. The day is done for the DAX. All right, you guys, if anybody has any other questions, please type away. Otherwise, I think we're going to button things up for today. See what's going on in the NQ again. No more questions? All right. Well, thank you very much for your attendance today. I hope that you found the session informative. If you have any questions, please do not hesitate to ask me if you would like more information about the trading tools. Let me once again post this link for you where you can go to find out about the DTS systems and the Raptor and that sort of stuff. And of course, you're more than welcome to email me. I'll give you my email address. It's eric@supportandresistance.com, which is my own private website as well. Okay, you guys.